welcome. Thank you for joining us on Business Incorporated. I'm Chimezie Obi Iwago. Today on the show, Nigeria's inflation rate rises to 11.28% in November. Foreign direct investment in South Africa down in the third quarter. Plus, Namibia's central bank revises down GDP forecast and expects 2018 contraction. We'll begin with Nigeria as the inflation figure for the month of November increased to 11.28% year-on-year. That's 0.02 percentage points higher than October's 11.26%. Data from the National Bureau of Statistics shows the headline index increased by 0.80% in November, up by 0.06 percent points from the rate recorded in October. Percentage change in the average composite CPI for the 12-month period ending November was 12.41%, representing a 0.37 percentage point decline from 12.78% recorded in October. The urban inflation rate increased to 11.61% from 11.64% in October, while the rural inflation rate increased to 10.99% in November from the 10.93% recorded in the previous month. The composite food index rose to 13.30% in November due to increases in prices of bread and cereals, milk, cheese, egg, fish, vegetables, and, of course, other tubers. And to the markets now. Here in Africa, Egypt is closed for the weekend but traded in the positive on Thursday. Meanwhile, at intraday, the Nigerian stock index was up 0.36%. The JSE index was down 0.97%. Kenya closed in the green on Thursday at 0.02%. And markets in the Middle East are closed, but sentiment was positive on Thursday. All the markets traded in the green, with Dubai leading the gain, closely followed by Abu Dhabi and Saudi Arabia. In Europe, stocks tumbled amid escalating concerns of a sharp slowdown in the world's second largest economy. Well, we'll cross over now to Frankfurt, where Conrad Bosen is standing by to give us an update on the developments there in the European space. Good afternoon, Conrad.
Good afternoon, Jimmy. Thank God it's Friday.
Thank God it's Friday. I always look forward to this day, Friday. Anyway, it's a busy Friday for the markets with lots of economic data to digest. Japan's business mood, capital expenditures remain steady, but the outlook soars. And in Europe, purchasing managers' indices have come out from Germany and France. How bad is it? How much pessimism are reflected in those numbers?
I have to say a lot more pessimism than what economists had forecast. Especially the Purchasing Managers Index from France is a real disappointment. It fell by 5 points in November to 49.3, and that means it has fallen in contraction mode. You know, every reading of this Purchasing Managers Index that the Market Institute calculates according to a survey among purchasing managers, every reading below 50 indicates that the economy is contracting. So a slower economy in France in the month of November, and that makes a contraction of GDP in the current fourth quarter at least a possibility. The Purchasing Managers Index here in Germany has lost slightly, but it remains above 50 points at 52.2. But I have to say, optimism isn't really large for Germany either. Today, the Bundesbank here, our National Reserve Bank, lowered its growth forecast for the German economy, and that makes the Bundesbank the fifth institution this week to come out with a weaker outlook for the economy. The German federal government in Berlin lowered its economic outlook this week. Two of the major leading economic research institutes in Germany, IFO and the DIW Institute, both also more pessimistic about the outlook for the economy here in Germany. And remember, yesterday the European Central Bank had its meeting here in Frankfurt, and there the ECB came also out with a weaker economic outlook for the whole of the euro area.
corporate news, LV is making headlines with the acquisition of the high-end hotel chain Belmond. Is this the right time to invest in the luxury market?
Yes, it is, Jimmy, and this is one of the great stories today. The share price in LVMH is lower, but this has to do mostly with the relatively high price that LVMH is paying for Belmond Group, a 40% premium on last night's Belmond share price. That's a lot of money. But all of the analysts and of the experts that look deeper into the luxury sector are convinced that this is a great opportunity, an opportunity in a lifetime. This hotel chain is really a gem, something that you don't find twice in the world. You know, Belmond used to be called the Orient Express Hotels because this hotel chain also runs the famous Venice Simplon Orient Express. And if I name a couple of the hotels that this chain owns, the Cipriani in Venice, the Grand Hotel Europe in St. Petersburg, the Hotel Copacabana in Rio de Janeiro, only to name 3 of those hotels, analysts are enthusiastic. They say that LVMH will be able to perfectly connect its luxury brands with those hotels, and that it will, in the long run, make a lot of money, despite, you know, the relative high price that Louis Vuitton, Moet Hennessy, LVMH is paying for Belmond hotels here.
Conrad, the trade spat between the US and China, the Brexit drama for the financial markets, this has been another nerve-wracking week, hasn't it? What's the mood like today on the Frankfurt trading floor, and what's the outlook like?
Well, I have to say the mood is less luxury hotels and more disappointing economic data. And the outlook is also quite sobering as well. You know, in America, in the United States, half of the CFOs, a little bit more than half even, the chief financial officers of American companies now believe that America next year will experience a recession. That's a not so positive outlook for the economy there. And of course, it's sort of contributing negatively to sentiment on the trading floors. That makes the number one event next week that everyone's focusing on even more important, the Federal Reserve meeting. It's expected that the Fed will raise interest rates in the US, but of course everyone will be eager to see what hints, what indicators and indications the Fed will give about what further interest rate hikes for the US might be expected. This will be the major event next week, and given that, you know, the holidays are coming up, fewer and fewer market participants are coming to work and taking part in those markets, it's quite likely that the Fed event will really decide what the last trading days of this year 2018 will look like, not only on Wall Street, also here in Frankfurt and all over Europe.
Well, Conrad, thank you very much for your time. It's been a wonderful week, and I'm not sure if I'm going to see you before the Christmas holiday. If I don't, have a Merry Christmas. Enjoy the rest of the weekend.